Eric Morgan from Mother.com with a weekend market analysis for January 21st and 22nd. And for the week, let's take a look at how the markets have done. We can see that generally US markets are down. The Dow is down the most, down about 3%. NASDAQ, surprisingly, is almost unchanged. And we can see for the week, the cryptos are up more than 2%. Let's take a look at the charts here, beginning with the S&P 500. And it is not a secret that everybody is watching this trend line here to see whether the market is eventually going to be able to clear and move above this, giving institutions all the reason in the world to be bullish, or as was the case, and there's a lot of talk about this throughout the week, that the market has found resistance here and is pulling back. This is the S&P 500 from a 2-hourly standpoint. So definitely an area of interest for all participants above the line, and it's going to be a good reason for bulls to be excited and for markets to push higher. And continued resistance around here on this trend line, clearly resistance is going to encourage the bears. Now that's where you can use the price. I would prefer to use the RSI. We can see this area here, again almost similar to the price channel here. S&P 500 this week tagging that level and now showing resistance. Ultimately what the bulls want is the market to move above that declining line. Now, we spent most of the week with the RSI below 50, but guess what? By the end of this week, we are back above 50 on the S&P 500. I think net, that's a bullish stance for the market. And by the way, I think the big question is these lows here in the S&P 500 from October. Are those lows that we're not going to see for a couple months, couple years? This is the big question in my mind. And I suspect if you take the Dow and the S&P 500, these October lows could be major multi-year lows. And now we're in a market that is sideways to higher in the months and in the weeks ahead. Yes, I know there's a lot of talk that we are going to go down, markets are bearish and all that. Yes, we know all those concerns, but the price does not reflect it. On the daily, for the S&P 500, we can see for today, S&P 500 pushing above 50. So we can see that once the S&P 500 retook RSI 50 for the day, we knew that we are going to be closing higher, potentially with a 1-2-3% gain, and we are going to close toward session highs. Now, don't forget that there's also another important takeaway in my opinion, and this is the S&P 500 monthly. Take a look at your RSI. It's reclaiming the level above RSI 50. This is a big one. As long as the S&P 500 is above 50 on the monthly, we are in a sideways to higher market. The NASDAQ on the weekly. Now, unlike the Dow and the NASDAQ, unlike the Dow and the S&P 500, you can see the NASDAQ went higher and has already retested these lows from October and is now pushing higher. Of course, the question is it going to go back, test the lows, maybe break them? Or are we now in a market that has already formed a very nice double bottom situation, and that ultimately in the years ahead, we're going to see this market move higher? Might take months and years, but these lows could be lows we might not revisit for another long stretch of time. Now, while this is the case from the charts, a lot of talk is that the market goes down substantially. I even heard somebody saying another 50% down, and personally, I don't see it on the charts right now. It's not on the charts. NASDAQ also on the weekly here. If you take this line here, we can see this is an area where we were getting resistance for most of the week and we were pulling back, and we could eventually show resistance. But it looks like if we set up correctly here, if we can clear this line and move higher, this is a market that could actually take off. So let's just keep that in mind, that yes, there's a lot of bearish sentiment, but the price and this RSI that I see is not as bearish as it seems if you follow the financial media. Taking a look at the NASDAQ daily, we can see that if we take the prior resistance line, this is also encouraging for bulls. We move above the line here, and now we are using it for support. That to me is also a sign of a market that is stabilizing. We are holding the 50 after moving above the 50, and now we are pointing higher. Net, the conclusion here is this market is sideways to higher in the short term. Taking a look at the NASDAQ from a 30-minute standpoint, and we go back to these highs of November, we can see that this is where we break this trend line here, and ever since that area, which by the way happens to be around RSI 61.8 on the 30-minute chart, RSI setting of 26, so around 61.8 is where this red line is. We can see that this is where markets have been topping out For example, here we have a double top rejection here for a swing trade down, ultimately another break and resistance for this top, above it and back below it with uniform activity and this resistance for these tops here. We eventually also come close here. We are rejected. We move above this level for a little bit and we can see we have a favorable market movement here. And then ultimately we go back to resistance. In fact, we can say that throughout this process, we held above the line or above RSI 61.8, and then we broke below it. And after breaking below it, of course, this is this area here, we break below it. And now we're in this general area. Either we get a push above this area, and of course, that's going to lead to further price movement high in the short term, or we get resistance around current levels and the market pulls back. So we shall see what direction the market wants to take. But on the 30-minute, this is the decision the market would need to make in the here and now. We can also see that it is a backtest area of concern right there. Let me bring back the previous line around RSI 61.8, the red line right there. And then we have this top side line. All of them are converging around where the RSI is. So resistance here as we go into the last couple of trading hours here, 2 hours to go before the end of Friday session. Or if we can early in the new week clear these 3 lines, then we might go higher. So resistance and a pullback, or we move above the 3 lines and we move higher in the short term. Remember, on the big picture, the NASDAQ monthly is going back to 1990. This line has held. So in the long picture, month to month, we're still looking at a market, and this doesn't care about the news of the day. We've seen a triple bottom support, and as long as we are holding, this is a market that in time and over time is sideways to higher in the months ahead, unless we break this clearly defined line. By the way, this line also conveniently happens to be just above RSI 38.2. And just a quick reminder, yes, the Dow is pulling back this week, but remember, the Dow has already bottomed here and is quite a distance from the lows of October. And that low was clearly seen if you are watching and following. If you are following my analysis, we saw this support here in October. That has held. And net, as long as this line is being respected by the market, we are still in a market that is going to be sideways to higher, even with pullbacks. By the way, the IWM, we can see here this action. This is already a double bottom. So we found support here, these lows of June and lows of October. They seem to have held while the NASDAQ came here to test its October lows. So this seems to be constructive in my opinion. In fact, if you take a look at a longer picture for the IWM, we can see that similar to the Dow, there's this simple line here, which explains why we found support in middle of the year in June, July period, and in October. It was because of this double bottom support on the IWM, the Russell 2000. So chances are this Russell 2000 index has already seen major lows. And from here, we are sideways to higher. Having said all that on the IWM, take a look at the following 2 lines. We got this top side line, which it needs to clear. This week was showing resistance. So this is a line of challenge right now. And there's also another way of looking at it. And this is a 5-year weekly chart for the IWM. We can see that this is where we see a break coming off the highs of late 2021. And we can use that and use my uniformity principle or concept. And this line here, this uniformity line, the reason why I call it uniformity is because you can see anytime you have uniform activity above the line back below it, it's a good indication that there's a reversal in place. We target here twice and we got resistance, and we are getting resistance again this week. So definitely an area of concern. What the bulls need to do here is push this above the 2 lines, and we're going to be seeing another push in the market way above this band of resistance here at about 187, 188. Taking a look at the VIX daily, this is a chart that is telling us we can use this declining top side line resistance on the VIX as indication that as long as the VIX is below this declining line, it should be sideways to lower, which means that one can continue playing breakouts or one can continue playing the market from a bullish perspective as long as we are being rejected on this clearly well-defined line for the VIX daily. At some point, should it retake the level above this line, maybe we can reevaluate the bullish stance in the short term. But this chart to me, net day to day, is suggesting that the market is looking stable to bullish. While not everybody, but people are concerned with the next trend, thinking it's going to be absolutely bearish. Take a look at Google, which we can see here is forming a double bottom and is already pointing higher. Remember, at the highs, people were excited in this phase, but the next phase was actually lower. So sometimes following the general sentiment makes no sense. If we take a look at the long-term picture for GOOGL, we can see that long-term picture is currently very encouraging. Take the lows here of late 08, early 09, and again use the principle or the concept I call uniformity. Take a look at this. It doesn't get any more obvious as this monthly chart for Google is concerned. Double bottom support. As long as it is holding these two support zones, the double bottom remains intact. It means that this eventually coils higher, which means prices ultimately move higher. We might have seen major lows as far as this stock and many other stocks are concerned, to be honest. Now, you can play that from trying to find stocks that have been really seeing a major drop, or you can understand that the best way to ride and the fastest way to see a big return is to play breakouts. As you can see that even in this example, the best time to have bought the stock is when it was riding this massive bull market run. So playing breakouts makes sense. In fact, brings to mind a stock that has recently done well, WFRD. And we can see here lows in middle of 2022 at 17, already trading in the 57, 56 price level. And recently there was a breakout here in October, which we were fortunate enough to capture this breakout with a breakout alert sent to paid clients right there. And there was another breakout here. So while everybody is bearish, markets are pushing some instruments higher. The breakout alert is from October 24th, 2022. And here is the breakout. The breakout level was at 38.40. So if you want to find similar breakouts, you know what to do. You can join my paid service, but you don't have to. Taking a look at another stock here, UCL, you'll notice, I know this is not a fair example. Here, it was at 60 cents, 0.6, now trading in the $4 price range. And in fact, even this week, this stock is breaking out. So it does make sense to have some portion of your portfolio dedicated to breakouts, because this is where we see strong push when conditions are favorable. Take a look at Netflix. Remember, in this period here, May, June, July, nobody cared for it. This was in the 175 price level. Now it's at 325 and it seems nice, right? Doesn't it? By the way, don't forget, it is also breaking out right there. Now, if you take a look at the long-term picture for Netflix, I'm going to propose, and I did propose at the time, going back many years at the beginning, months of 2022, I proposed this line. And I know at the time it seemed so ridiculous to suggest that this line would give us the lows. But guess what? Apparently, it did. And if you squint, you'll notice that it refused to go below RSI 30.9, which was a bullish stance. In fact, if we zoom in, we can see this is the lows here. It generally refused to go below 30.9. That was a bullish stand right here. So this movement and a recovery only makes sense. By the way, taking a look at EFA, the European tracking ETF, tracks the European markets. You can see for the month it is above 50 and has about 7 to 8% gain so far. But really what I want to discuss here is at the lows. If you take a look at the long-term picture here, around this 38.2 level, this is where this instrument has been giving major entries over the last, let's call it 12, 13 years. So if you've been following this, if you understand how the RSI can be used to time major turnaround situations, when it came down here in 2022 and found support, the indication and the suggestion was that more than likely we're going to go higher. Taking a look at VT, Vanguard Total World Stock ETF, we can see that it is attempting another breakout here, which if it can be successful, can only be bullish. And of course, we know that if it ends up failing and we have a rejection back below, let's say 90, a failed breakout would be a red flag and a reason for a short-term pullback, if not a serious pullback. And don't forget that we also have the moving averages. We can see the 13-week moving average and the 8-week moving average are crossing over. Generally, that tends to be a bullish indication that things are going to be moving higher, just as we had a bearish crossover here between the 13 and the 8-week moving average, and that crossover led to this pullback that we saw in 2022. But that's not the main takeaway. What I want to discuss here is for the month of January 2023, the RSI is pushing above 50, which net means that there's a very, very high likelihood that we have a strong monthly push and we also close towards the highs of the month. Taking a look at TSX, we can see that it is doing its best to clear this area here based on the recent weekly closing high from late 2022, and that price level that it needs to move above is 20,485. 0.66. A breakout is needed if the bulls are to push this lower, push this higher, while bears will want to see a failed breakout and things retreating from this area and pushing down. Also, based on the RSI, just as we've seen with other markets in this video, this is an area of concern. We need to clear this if we're going to move higher. Otherwise, resistance here would mean that the next meaningful direction for the Canadian market and potentially for US markets is going to be for a pullback. So a breakout is needed above the line and also above 20,485 if there's going to be another push to the upside. And that's the Canadian market weekly. Taking a look at the Nifty, we can see that for the week, pretty much unchanged, up about 0.4%. And I would suspect that this line here that I've been proposing has yet to be broken. So as long as it is holding above this line here, chances are the Nifty is sideways to higher, with the understanding that if it breaks below the line, it might see a drop. This line comes from this breakout here, which led to this move here. And we can say that still that price breakout from a week-to-week standpoint is intact. Yes, we'll pull back, but we haven't broken down. Taking a look at the daily for the Nifty, we can see where the 50 RSI level has been rejection, and now also the same thing here. So it's not the worst pullback, but what needs to happen here if bulls are going to push this higher is we need to reclaim and stay above 50 so we can have a chance of moving higher. Just like we stayed above 50 here, the market had a chance to have this nice move higher. We stayed above 50 here, we had a chance of moving higher. Otherwise, the more we stay below 50, we are looking at a market that could conceivably drift lower. On the monthly for the Nifty, as long as we haven't broken this trend line here, as long as we haven't broken it, I would say this is still a market that is sideways to higher. And a break of this line is going to introduce further price erosion. So we need to be vigilant of that level. I would say the next bullish scenario would be a breakout above the recent November monthly closing high. And that price level to watch there for a breakout for the Nifty, which would be a bullish signal if it can clear that level, is 18,758.35. So a breakout above that level is exactly what the bulls would want to see. Now, there's this breakout level here, which still remains intact. And that's also another level we can watch for the Nifty. This breakout is still intact. We're above the previous breakout level of 17,959.20. If we can stay above this level and build for a future breakout, that would be great. And at the same time, if we end up breaking below this level is only going to bring another red flag, and we could see prices drift lower. So above this price, bullish; below this price would be bearish. GLD, just want to point out a couple of things here quickly. GLD on the weekly, the RSI is above 69.1. As long as the RSI is above 69.1 on the daily, expect this to be sideways to higher. Same thing, actually that's the weekly, that's above 69.1. On the daily also, GLD is above 69.1, so we give it the benefit of the doubt. Now, in the coming weeks, I'm going to show you something that is potentially taking shape on the monthly for GLD, which could be a little bit of a concern, but that's for later on. The monthly charts will tell us when we get to that point. But right now, as long as the weekly and the daily are above 69.1, let's give GLD the benefit of the doubt. Now, when you take a look at XLE, we can see that it's been flirting with its monthly breakout and still no strong decision. But right now, it is above 90.9.2, so 90.22, which again is November's monthly closing high. If it can stay above that level, and more importantly, the RSI would need to move above 69.1 if the XLE and the energy names are to go into another strong run. Failure to break out and failure to hold. So failure to break out and failure for the RSI to hold above 69.1 would mean that the next meaningful direction for energy names is for a move to the downside. On the monthly for the USO, which tracks crude oil, we can see that as long as the monthly is holding above this upward sloping trend line that connects the lows of early 2020 and the lows here of 2022, as long as we're above this line, we can give it the benefit of the doubt to be sideways to higher, and a break of this line would definitely invite some selling. So right now we can give the benefit of the doubt to USO to move higher, which is crude oil essentially. And we take a look at the daily, we can see that there is a flattening out 200-day moving average, and it is doing its best to break out above this top side line on the RSI. And so again, another reason to give crude oil the benefit of the doubt that it is sideways to higher. Now, of course, if it cannot break out above this range here and prices drift below this area, if this is RSI showing resistance back above this area, that would be a reason for a pullback. But that reason for a pullback is not in front of us. What we have here is a potential for a good breakout. So let's give the benefit of the doubt to energy names being sideways to higher as well. Taking a look at the cryptos, and in fact, even the general market, we are at session highs essentially. That's the US markets. And if you take a look at BTC, it is also currently close to session highs. And taking a look at Ethereum, we can see it is also close to session highs. This is not a surprise. Why? And they are all moving to, as you can see right there, moving to fresh intraday highs. I'm going to show you why this is not a surprise. It's because of where the RSI is trading on the daily for the cryptos. Now, this is Ethereum. Let's go to BTC on the daily. Take a look at where the RSI is trading on the daily. This is 6 months daily. Once we moved above 69.1, you know what happens, right? So above 69.1 was somewhere here at about 17,000. Let's call it under 1750, 17,500. And we can see that after a couple of days of rest, 4 days to be precise, we are breaking out, and this breakout on the daily is taking place while BTC is above 69.1. So yes. Day to day, expect BTC to continue having this strong push as long as the daily is above 69.1. And it also means that we're going to see a situation more than likely where we go higher, we pull back, we make higher highs, and then we start drifting lower. Why? Because it's the only way the RSI can give us positive divergence. Negative divergence. Hope that makes sense. In other words, because of the strength of this RSI, more than likely, we are seeing a good breakout here. Prices are going to move higher with a lot of force. RSI is going to eventually pull back, come back, and do something like that. But in the meantime, prices are going to be higher. In other words, this improvement in prices and negative divergence down the road is going to lead to a more serious pullback. But for now, don't forget also we have a flattening out 200-day moving average. So all of this is taking place, showing a lot of strength. And the same thing can be said for Ethereum. You can see RSI moved above 69.1 here when it was at about, let's call it under 1,350. And it is seeing a fresh daily breakout. RSI still above 69.1. So you give it the benefit of the doubt that it's going to be strong as long as the daily RSI is above 69.1. If there is a concern for the cryptos, it's on the weekly. This is Ethereum on the weekly, and I'll propose that there was a break here, of course, a major break in late 2021. This break right here. So we broke down here. We haven't been back to those levels, and now we are coming back to challenge that break point. And if you go back to early last year, we knew that this was a rejection point when Ethereum hit that level, 3,500, because of this uniform activity resistance. Hence, I call the method uniformity. And now we're back in this general area. So you can see the concern here is week to week. If we roll over below the blue line with uniform action, this is going to be another area where we can expect a pullback to take place in the cryptos. If the cryptos have truly bottomed, they're going to have to clear this declining line. This is Ethereum on the weekly. Taking a look at BTC on the weekly, I'll give you a different way of looking at it. It is a backtest line. I'm going to draw it as such. And here we can see again where we broke down in late 2021. Went above it, back below it with uniform action. Hence the method is called uniformity for that resistance area. And now we are in the general area of the previous support line, could turn into resistance. In other words, week to week, if we roll over here like that, that's going to be an area week to week where we start pulling back. If the market is to push cryptos higher, it needs to take out this declining resistance line, or I should say inclining resistance line. At any rate, day to day, those who are bullish with the cryptos can continue owning the cryptos and expect a strong push as long as the daily is above RSI 69.1. And this is a concept, an original concept by yours truly. Otherwise, be on the lookout for my breakout alerts for Moathe.com clients. I am Eric with Moathe.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.